Mark is long Eurodollar. Half an hour into the trade, his platform is showing plus $400. He screenshots it, texts his wife, tells her tonight they're going out to celebrate. He does not close it. 20 minutes later, price snaps back hard, and by the time he panics and hits the button, his account is down $150. His stop loss didn't fail. His entry wasn't wrong. What killed that trade was not understanding two words: unrealized and realized profit and loss. That $400 was never actually his. It was floating. A number that moves every time the candle moves, right up until he clicks close. This video is about the gap between what your platform shows you and what your account will actually pay you. That gap is exactly where amateur accounts quietly bleed out. Unrealized profit and loss is the floating number attached to any trade you still have open. It exists only because the position is alive. Push the price in your favor and the number climbs. Push it against you and the number falls, or flips negative, in the same second. It is recalculated on every single tick, which means the exact number Mark screenshotted at plus 400 was already outdated by the time his thumb moved off the screen. Nothing about that number is guaranteed. It is a live estimate, not a payment. But if it can grow, and it can shrink, and it can vanish, there has to be some moment where it stops being an estimate and becomes something you actually own. When does a floating number turn into real money? Realized profit and loss is what happens the instant you close the trade. Whatever number is sitting on your screen at that exact moment gets frozen and drops straight into your account balance. It is no longer attached to the market. Price can go on to run another 200 pips in either direction and it will not touch that number because the trade doesn't exist anymore. Had Mark closed at plus 400, that plus 400 becomes his, permanently, the second he clicks. So both numbers, unrealized and realized, can show the exact same figure on the screen. So what actually separates them, besides just the timing of a click? Because right now that sounds like the same thing wearing two different names. Here's the real difference. Unrealized profit is theoretical, it's paper money, it is still sitting inside a live market that owes you nothing and can reverse without asking permission. Every second that trade stays open, that profit is still at risk of being given back, and in Mark's case, given back and then some. Realized profit is different in kind, not just in name. It is actual cash that has physically been added to your balance, and the market's next move has zero power over it. The part that actually decides whether Mark's story ends well or badly isn't the floating number at all. It's what his account balance is doing while all this is happening, and that's coming up right now. This is the thing this whole video has been building to. Your account balance does not move 1 cent while a trade stays open, no matter how large that floating number gets. Watch it happen. Price climbs, his floating profit shows plus 400. But the balance box behind it does not change, not by $1, because the position is still live. Then price reverses. Candle after candle gives it back, and the floating number drops through zero into negative 150. He finally closes. Only in that one single instant does the balance actually update, and it updates down, because what got realized was a loss, not the profit he was celebrating 20 minutes earlier. Balance moves once, on the click, never before it. Pause the video right here and pick one. Two traders, same pair, same screen, both showing plus $400 this second. Trader A closed the position 30 seconds ago. Trader B is still sitting in it. Which one can actually go spend that $400 right now? Trader A can, obviously, because that number became realized the moment they closed. Trader B's plus 400 could be plus 400, plus 40, or negative 40 by the next candle, because it is still fully exposed to the market. Same number on two screens, completely different reality behind it. This is exactly the trap Mark walked into. He was reading his screen like he was Trader A when he was actually Trader B the entire time. The most common mistake around this is treating a floating number like it's already spendable. Traders mentally book the profit the moment they see it, plan a purchase around it, tell someone about it, and then refresh the platform every few seconds watching it shrink, hoping it holds. It usually doesn't hold, because context matters more than the number itself. A plus 400 sitting near a major resistance level behaves completely differently than the same plus 400 sitting in the middle of open space. And most traders never even check where price is before deciding whether to protect it. The fix isn't complicated. Floating profit only becomes real when you decide it's real, by closing, not by watching it and hoping. So here's the whole thing in one line. Floating profit is the market's opinion. Realized profit is your bank statement. Write that down if it's the only thing you take from this. Go back to Mark. If he had simply closed that trade the moment he texted his wife, that plus 400 would have been real, sitting in his balance, untouchable. Instead, he let the market keep voting on it, and the market voted against him. Same setup, same entry, completely different outcome, because he confused a screen number for a bank number. Now that you know a trade isn't actually won or lost until it's closed, the next thing that matters is where you place the stop that decides which way that close goes. And that's exactly what we're building next. Tell me in the comments, which pair are you watching your floating PL on right now?